Hey, welcome everyone to Trading with OC. Okay, guys, have a great afternoon today. I'm just here with my fourth coffee. Guys, this is just, I don't know, nuts. Yesterday, I was falling asleep on my place. You know, the worst thing about this sickness is not the coughing, it's not the medicine, it is the tiredness. I don't know why. It just keeps getting me on that side. Not sure what's going on. Already, this is my fourth coffee of the day. Still doing fantastic though. And let's do it because today we have a little bit of a surprise since we went over a little bit on an extended 18 chapter. Today we're going to be tackling two indicators at once just to follow up and catch up with the schedule. All right, so today we're going to be looking at MACD and the RSI, how they work, how I use them, and spoiler alert, I don't use them anymore, and you'll see why in a second, because we already have built up another much better indicator and also a much stronger confluence system, right? But they have a special place in my heart, and of course, many of those big traders still use it, and when you're starting up, this is something I think you need to look into, right? Either once and then understand it and see if it fits with your setup. But let me get started with you guys because you guys are the most important part of the show. Of course, we have Week Wife. What's up? Welcome, number one in the chat. Thank you so much for stopping by. Really appreciate you guys taking the time to stop by in here. We also have Frank the Tank. Welcome, my friend. Nice to have you around. And who else we have so far? Those two, both of you guys, thank you so much. Let's continue. In the meantime, the rest of the gang join us. So let's go to the charts. All right, perfect. We are on the charts. Before we get started with everything, let's do a little bit of overview on what's going on, especially on Bitcoin and of course where we're sitting so far. This is where we left out. Remember? Slightly pushed to the upside, maybe going through our, in this case, this is our SMA combo, remember? The same one that represents our dynamic reactor, all right? So we are pushing through that SMA combo. That's perfect. That's what we want to see in here. We want to have a little bit of a maybe rejection. That's what we're expecting, a rejection here or a turnaround of that mountain right there. So maybe having a peak performance, something like this, a peak performance at the top. Let me just get rid of this. All right, a peak performance, and of course a maybe double top mountain like this. All right, or something around those lines. Or I mean, this also could be something that we could be expecting in here, and that is because we are expecting a follow-up to the upside in here. So it's not about the breakout, remember, it's about your retest or pullback, and then off we go. So far we are good. We're struggling there, pushing through a couple of resistances, but still holding its ground. As time ticks in here, I want you guys to be very careful and look into the colors that we have on our linear regression oscillator here. Remember, when we have those very bright greens in here, we are topping out, we're maxing out, and sometimes if the bull or the bear trend is not as strong, we might not have a peak performance diamond. All right. So we have Califant in the room. What's up, Califant? Nice to have you around. Thank you so much for taking a minute and jumping back into the class. Really appreciate it. Welcome. All right, so far doing fantastic. Let's review what we did in the morning market report, just in case you missed it. The plan number A, remember, we always have plan A and plan B. Plan A was going to the resistance area. So far, so good, but we have right here a trend line which we are battling right now. Remember also that I was expecting a goose head. We already have that goose head. It's not a perfect goose head, but still looking to the upside goose head, right? Slightly going up, right? So that means that when we have that kind of goose heads, we have just a slightly bit retracement for then a further continuation to the upside. So that actually means that we might be having a slightly continuation to the upside, a reversal, if we are lucky enough to hold this zone as we come back down here and have a rejection, I think we are set to plan number A, right? So plan A. So far, plan A looking fantastic, still within in line. And then the plan B, give me one sec. Oh God, I'm just, do you know, it's getting worried, or I'm getting worried as I'm getting good at timing when I'm cough and muting the stuff. So, I mean, something I just realized. All right, but plan B, it just was basically just rejecting out of this confluence zone and going back to the trend line. Still, this is not out of the way, all right? This just has moved to this area right here. All right, so let's just leave it as is, but let's count that I'm telling you guys at this point that is still valid, but it just has moved. Why? Because we haven't broke through the trend line in here, so the trend line is still valid so far. So Jesus Saves, what's up, bro? Or Jesus Saves, what's up, my friend? Welcome. How that one AK, hey, what? Hey, I'm not following that. But all right, I guess not following that. Maybe somebody can fill me up on the joke there. Not sure. All right, so let's continue. At this point, we're settled. We could be expecting a couple of altcoins just stabilize. So this is exactly what we're seeing, exactly what we were expecting. All right, so Solana stable. XRP is actually pushing upwards as we were expecting. So far so good. But still, we need to look into the oscillator to see that goose hit. So far, so good. Still playing out within those, let's just leave it, perfect. Within those areas. In Toncoin, getting to resistance. Let's look at our oscillator here. And I have a couple of stuff out of their order. So maybe if I can grab this like this, yeah, much better. I can have it on its place. All right, so far, so good. We're still bearish. We are below dynamic reactor. We're making that try. So do you want to come in here? I don't know. This is still a high order block unless I see it get rid of or disappearing. I wouldn't trust it that much. I rather would go into something like the 15 minutes to trade the actual range and hedge the range, right? But so far, as I mentioned, I'm not gonna be trading altcoins just for today. Only something it's looking very, very juicy. But so far, so good. All right, so let's dive right into what we're here for, right? So let's leave in here. Let's minimize this stuff and let's go to a cleaner chart. Let's see if we have something around. Grass, yeah, I think why not? Grass, well, it's a little bit too noisy. Let's go for another kind of Bitcoin. Let's see, this kind of Bitcoin. Yeah, why not? This is the one that we explained, the Fibo retracements. So I think this would be a good introduction. So let's go and add the indicators. Let's get started with the MACD. All right, so MACD stands for moving average. Oh, I got it right there, in fact. Convergence, divergence. Here it is. So moving average, convergence, divergence. That is our MACD. So MACD, right? So let's just click it once. Again, it will be add to our setup in here. And let's get started with that. So there's two components, or as you can see, well, three components into our oscillator, right? It's an oscillator, by the way. I think I should have started with that, right? This is one of the most famous oscillators used out there for traders. But it has two main components. It has a histogram. The histogram is the bar things, right? These things in here, which, by the way, remember the moving, the squeeze momentum indicator that looked like very same. And also, if you remember, look at that. We also have something that kind of like pairs very closely, but not quite there. Like, for example, right here, we knew this was not such a big trend. Look at that, basically non-meaningful at all. Well, in here, it almost casted as important as this one, which this one had a much larger trend downwards and then upwards, right? So that's why I started telling you guys that I don't use it anymore. And that's because we have got to a point where we have developed our own oscillator that, at least for me, fits my needs perfectly, or is a little bit more accurate or early at calculating those size of movements or trends. Nonetheless, the first component, it is the, there you go, the histogram. The histogram measures momentum, all right? Then the second component, it's a combination of something like EMAs. Let me double click on the indicator. And by the way, I can double click any part of the indicator. It doesn't matter if it's a histogram or any line or anything like that, because it is all part of the same indicator. It also, or I also can hover over the MACD and scroll over settings. So as you can see, settings, or double clicking this line, or even double clicking the histogram. It's just exactly the same, right? Hey, what's up, Alexander G? Welcome, Mud Queen in the house. How is it going? Johnny December, what's up, my friend? Welcome. Great to have you guys around. All right, so far, let me explain you how the lines work, right? We're gonna get started with the EMA stuff. Why? Because if you look at what we did in here, SMA, remember how we built up our SMA combo? We have one length, and then we have a smoothing factor with another SMA. So it's not two SMAs, right? It's a smoothing factor in form of an SMA onto an SMA, if that makes sense. If not, don't worry. Let me explain you as easily as possible. So the first line that we have, it's gonna be the blue line. Let me show you which one. So this blue line right here. Let me, you know what, let's make it, there we go, much easier to see. Let's clear this up also. Perfect. So first of all, we have the blue line right there. The blue line is what is known as the MACD line. This usually comes for default, or it happens from default as a subtraction from the 26th, or a subtraction of the 12th EMA out of the 26th EMA, all right? So let's just say that we have two EMAs. Let's just do like this, for example. We have the 12th, and then we have the 24th. So if we subtract one onto another, the other one, this one, the larger one, is gonna get a little bit more reactive, right? But not as reactive as the other one. So we're basically smoothing in a way the 26th EMA. So once again, the blue line comes from subtracting to the 12th EMA out of the 26th EMA. That will give us one single line. That is the blue line. This blue line, it is the MACD line, all right? So what does it work? Well, it just kind of like gives you a trend, right? Or a directional movement. What else can we have in here? Well, we then have another another EMA, my bad, which is the 9 signal smoothing in the 9 EMA. This one is this one right here, the orange one, right? This orange one that happens to move more smoother, right? And mainstream, this is called the signal line, all right? So now that we know what this, how is it called? Well, then how do you use it? Well, we just look at the parity between those. First of all, we look at the MACD. That is gonna be our baseline, the MACD line, right? And then what happens with the signal line refers to, or based into, or tied to the reference line or our MACD line, that is gonna have an action. For example, let me just make it much easier. When the signal lines crosses from the bottom to the top, or sorry, when the MACD line crosses, here we go, the MACD line crosses above the signal line, all right, here is where we have, or where we consider to start having a bullish signal, a bullish momentum, or we can confirm a bullish trend based on the price action. So we also need a price action, all right? And then when the MACD line crosses down the signal line, which is the 9 EMA, all right, that is a bearish signal, or losing that momentum, having more or less momentum than we have while we are above the signal line. All right, so the signal line is the one that is going to be very smooth, calmly moving, and then what's going to be giving us the actual prediction is going to be the action of the MACD line across the signal line. All right, let's do it one more time. When the MACD line, which is the blue one, crosses above the signal line, all right, this is bullish, and when we crosses downwards, this is bearish. All right, so far so good. Then what do we have up next? We have the second part of the system, which is the histogram. All right, the histogram is just a momentum. It measures the momentum change in an asset price. So basically, this is going to be giving us the momentum, right? And there's also one more specific specification here. Look at the different colors between this more concentrated color, this more saturated color, right, and this lighter color, right? It happens also right here and right there, right? Once again, let me show you what we talked about before, which is the let me see it. I should be having it right here. Where is it? Where are you? Squeeze momentum indicator, right? As you can see, it also does the same. And let me show you something interesting here. If I go to style, I can change the plot to histogram. And as you can see, it kind of like looks the same, right? The only thing that I wanted to show you is that we already are related to something like that. Remember when I explained this, right? And just changing it to the area, it's a little bit easier to see. Nonetheless, let's just get rid of this, the squeeze momentum. Let's make this one bigger. Oh, the other button. There we go. In this case, we just have it in a histogram section, right? The more opacity, the more concentrated, the more darker the color that we have, right? The more momentum that we're holding, right? And despite we're still green, right? The lesser or the lighter that color goes, it means that we're decreasing in momentum. There is a threshold of momentum, all right? So that is also measured by color. Once again, remember the same exact explanation that I gave you guys on the squeeze momentum and of course on our own oscillator. It is that everything that is green is bullish, because you could be going downwards in here and then have that spike of momentum, right? And this will continue the existing trend within a bullish movement. Therefore, as long as we're green, we are able to consider that we have that bullish momentum. The same goes when we're red. As long as we're red or pink, we are bearish. Nonetheless, brighter red, right, indicates a negative, strong negative momentum, and a lighter red, which is a pink color, a lighter or less strong negative momentum, right? So we're losing that momentum. All right, so let me get rid of this and let's bring up the price action. Let's just use it as we are supposed to, right? So at this point, we are on a range. If I zoom out, I am on a range in here. Sorry about that. And this range usually brings a lot of volatility. So let's go first to a trend and let's go piece by piece. So we're going to be analyzing first a downtrend, then a range, an uptrend, and then we're going to be giving a final decision in here, right? So either we're coming down or maybe this is a flat positive bullish continuation, so on and so forth. We'll see how that works. All right, so first of all, let's zoom in and let's read inner trends or inner structure here, right? This is one of those tools that helps you with inner structure as we go back and forth. And just so I'm not having these colors in here giving me a bias, let me turn off my, oh, come on, where are you? You gotta be kidding me. There we go. Let's turn off our linear regression oscillator for a second, right? This will give us a color change. There we go. And right now we could maybe be looking to a non-biased analysis for our MACD. All right, let me also get rid of this, get rid of that. So we have a much cleaner setup. Also, let's get rid of our SMA. No, I think that will stay. I think that's good enough. All right, perfect. So what are we looking here? When the price action it's trending, right? And we have those flat pauses, right? Like this. And then continuation, what we're looking for, it is our EMAs, all right? Those EMAs are gonna be confirming the existing trend. There's something called divergences. We already have talked about divergences, but we'll see divergences in depth in the next class because those are one of my favorite tools, and those divergences can happen with any oscillator out there. The ones that are played out the most, or my favorite ones, are money flow divergences, and strength divergences. So the MACD will give you very great divergences readouts, right? It's not automatic, but usually if you can identify them, you'll see that they usually play very nice, all right? So what's going on in here? We're going downwards in this case, and we'll see that, let me just, perfect, contract this for a second. Let's go and measure as we're crossing downwards, right? Remember, our MACD line, it's crossing our signal line. Perfect. That what is telling us that we're changing the trend, right? What happens here? We have a big body candle. Perfect. Are we crossing across our SMA combo? Yes, we are. So what are we maybe looking for? It's either the micro or inner trend breakout retest and off we go, or bigger confirmation with breakout retest, and then we short it, and then every single pound is too short, it's too short, it's too short, right? Nonetheless, let's keep reading what happens with our MACD lines. So there we go. We have our first cross in here, and then let's go to the next cross in here. Let's go for that one. Perfect. Right there. And you'll see that basically on our next candle, in fact, one less. Oh, I cannot catch the very cross out, but that's fine. You'll see that for most of the part, we created a little trend. There's a caveat here, guys, all right? Depending on the strength, which also you can read out from the momentum, all right? You might have a little delay from when the cross happens, right, to your confirmation of the trend change. That's why you should not be trading solely on the MACD lines or just the MACD oscillator. The MACD oscillator, in my opinion, it should be used with traditional TA, especially with trend lines, support, and resistances, all right? So having said that, let's see how late were we and how could we fix that, all right? So let's see. So far, if I shorted at the candle close in here, right? And then I close my short at the candle closing here, I will be making a whopping, oh, come on. Don't tell me that I cannot draw this. All right, perfect. A whopping 0.56% gains, right? Tremendous. Of course, this is a joke, but you'll see that depending on the size of the movement, right, and the size of the trend, you may be, I mean, being so tight around the corner there that almost did nothing at all, right? So how do you trade this? Well, there's two ways that I could suggest you trading it. First, looking for what we call the flip of the ribbon in our oscillator, right? It's just the MACD line having a sharp change of direction. Look at this sharp change of direction. Let's see it. Right there. It was earlier. In fact, at candle close was here because that was a red candle, right? One more candle. Candle opens, well, basically the same zone, but not that bad, right? And then what I'm looking for is that sharp change of direction. In this case, you might have some confusing ones. That's why you need to look for support and resistances, all right? And take your odds. For example, if we had a resistance, which we had, remember, we're looking for top, 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 top. So an average trend line will be somewhere around there. Not trend line, sorry. An average resistance should be somewhere around there. So as we have one of those bounces, right, then also we should be looking at our momentum. And usually I'm looking for the next candle of that momentum. Are we going down? Yep, right. And then remember, we always do trend lines in support and resistance. Do I have enough candles in here for maybe a trend line? Yes, I do. I already have my reversal right here, which is not a proper reversal, but the flip of that MACD line, all right? And then I have my confirmation right here as I break through, all right? So as you can see, at this point, I could have gone and take my odds because I'm looking at least for 3 different confluences. The first one being the ribbon or the MACD line going downwards, the next one being a change of color of the histogram, and the third one being having a resistance in there. Again, at this point, since 2 of those signals come from the oscillator, the MACD itself, I would consider those 2 the same signal, right? So I still one signal short. What could I be looking into here would be, well then, maybe another confluence point like a VPVR, right? Let's take a look at our VPVR. There we go. And look at our VPVR is actually slightly below there, right? Slightly below. And then maybe our next shelf should be slightly higher. So we are in the middle of that, right? So what could we be looking for? Maybe the loose of this VPVR zone like that, right? It's not about your breakout. It's about your retest. And then look at that, your confirmation. Off we go. And then maybe if you went too late into here, you trade a candle close in here, breakout, retest, off we go. So as you can see, you have 1, 2, 3 different possibilities of an entry using confluence, all right? Using that confluence. Crypto Pollo in the house. What's up, bro? Welcome, welcome. Nice to have you here. So just bear in mind that when you're using MACD, using the crossover of the MACD lines might get you a little bit of a late entry. So if you have a late entry, you need to be able to catch some pretty good lows, right? So how do you do that? Well, then the answer might not surprise you, but also might not the one that you are looking for, which is layering out or taking profits as you hit resistance or supports, depending on what you're doing, all right? So easy peasy lemon squeezy will be just drawing our trend line. We have the crossover. We have the histogram change from green to red, all right? And then let's just say that you shorted right here, all right? Then what do you need? You need a support and resistance system. You can use your VRVP if you wish. Like for example, there is a peak in here, there is another peak in here, there is a much important peak in here, another one in here, and another one in there. So I have 1, 2, 3, 4, 5. What can I do? All right, since 1 is the most probable and 2 is the next most probable, right? I can go for 50% out right here, then 50% of whatever is left, maybe on the number 3 or number 2, whatever you like. I would actually go for number 3 because the first one I already have taking it, right? And then we are just 25% in, maybe taking my chances on the number 4, and that's it, calling out my trade. Look at how close I got from there, right? Then what happens? It goes down. We have the flip of the ribbon, very sharp ribbon reverse right there. And that could be another indicator, right? Or indication where we are. We are right there on this line for a support system. We have the flipping here. We have one histogram brighter or lighter color in here. All right, so what could we be using down there? Maybe a support, right? Or resistance like this, or maybe we could be going for, I don't know, a predictive range, or maybe you could be looking at our Gauss trend line, right? So there's any number of things. Remember, this is not about me, it is about you. From all of the indicators that we have visited, which ones you like and how do they play along with your MACD area. Once again, since we enter late, we sort of want to get out early, just so when we have the crossover, look at that. Let's just do it one more time. If I enter at the crossover here, which is the late entry, and it's one candle to my right, there we go, and then I exit at the next crossover, I will be making a whopping 0.3%. Not even 1%. That's what I want to get out early on the signal, right on the spot on the movement, if that makes sense, right? All said, what's up, bro? Nice to have you around, my friend. What is up, brother? Welcome. Johnny December, what's up, bro? Double shout out, by the way. All right. So where do I want to get out? Remember, at some support, scale out, or at your flip of your ribbon right there. Not ribbon, but your MACD line. All right. So this is then, as you might be able to see that now that turns into a 6% out of a 0.3% to a 6.8%. That is a huge difference, right? Nonetheless, this doesn't give you your next entry. Well, sort of. You can go for the risk of taking that one, but remember, I'm teaching you, so in a way, I'm kind of like hand picking it. Now let's do our due diligence and hand pick a bad signal, so we know how to go about it. And I need to hurry because we also need to take a look at RSI today. All right, so for example, let's just say that we have a flip of the ribbon right here. Perfect. Then you long it, doesn't hit the next stop, you see that? And right away we have another crossover. So you could maybe long in here, and whoops, it goes the other way around, right? So not all of the flips of the ribbon work. The ones that are on support usually work the best, and then you scale out as you go on profits. You see, once again? All right, let me pick it up as we go here. So my next entry wouldn't be exactly in here. It could, just to keep it consistent, would be on the ranging on the crossover. It's not about the breakout. What's going on in here? I'm turning back around. Maybe I can go and wait for a couple of candles going back into your support. It's not about the breakout. It's about the retest. Maybe we enter here, and then off we go as we start losing and going lower on our momentum. So again, if we are ranging, the time is sticking out. All right, the time is ticking. And if we are not able to break above, well, then the bearish scenario is going to cut us. Now that we understand that, let's go at the end of the chart and let's try to predict what's going to happen here. So far, what are we closer to? We have a resistance. We have another peak of resistance in here, and let's just draw them. Why not? We have one in here, we have another one in here, and we have another one in here, right? We just had a little inner trend, and what we need to do is create our next trend line. Let's draw it like that, I would say. Let's maybe skip this week so we have some solid bodies in here, and as long as we don't lose the trend line, right, and break our support zone right here, we're still okay. Why? Because remember, when we are ranging, the clock is ticking and we want to prevent or get out as we see the time runs out. But remember, we still have time, right? So if we break it and we do this, what are we looking for? We're looking for that reversal, all right? Remember, and then as we go down, we might be looking for the next crossover, or better yet, the flip of that blue signal. All right, let's see if I can find one of those things. All right, so we're going high here. Perfect. I think this is going to be a fabulous example. Basically same. Let me get rid of everything. Perfect. We have our trend line in here. Like that. we are expecting to have what? A flip of the ribbon or a flip of that MACD line. Perfect. We have the flip. We break the trend, right? We go lower. And what's going on? We were supposed to go low. And we don't. Time is ticking. Time is ticking. Time is ticking. You see now? We break back above. This is your next entry for a long. Off we go. Come back, try to get you out, or your second opportunity, and then off we go. And once again, we take profits as we see or as we scale out and up. All right. The same thing will be happening here. We already have a movement to the upside. We can draw our trend line. Perfect. What are we expecting right now? We're expecting that blue line to have a flip, and then when we flip, most likely we're already going to be into a range. As we flip back down, and this one also flips back down, we're going to be waiting for this area right here as we range. And if we have not yet lost our support, when we start flipping up, well, then we take the risk entry to the upside. All right. So I think that summarizes it. Bingo Bango says a trade intuition. What's up, my friend? Welcome. Welcome. Great to have you around, my friend. Nice. All right. So far, this is the whole mystery of the histogram. We use the histogram as we use any other tools that look the same, right? Like, for example, our linear regression oscillator and our squeeze momentum indicator. Use those the same. If you don't remember, go watch those series. We created from scratch our linear regression, and we have 2 classes on our squeeze momentum. All right, so far, so good. I don't use this anymore because I already have my support and resistance set up, and I have something that doesn't involve crossing of lines, right? I have my linear regression. There we go. Oh, come on. My linear regression that gives me peak performance, so I don't need to guess that, right? And also I have my ADX or DMI, ADX, which is pointing upwards. I do have strength on green, bullish, or going up on blue, bearish. Strength going up, right? On blue, bearish, or bearish strength, right? Or going up, strength on green. Green going up, bullish strength, right? Easy peasy, lemon squeezy. So because this kind of like it's easier for me, less things to look into, faster to glance at it, because I like to glance at my oscillator right before I look at the same time as I'm looking at for the trend or inner structure, right? I glance at it. And by the way, I pick up that from video games. When you're playing video games, you need to constantly keep glancing and glancing and glancing to your radar, just to make sure nobody's getting you from behind, all right? But that is the same analogy, right? You glance at your oscillator and you want to have an easy to read, easy to understand setup, right? Because that will lead you the way to understand whether you should keep going into that trade, keep open it, or maybe it's telling you, hey, time is running out, close that trade, right? So that's it for the MACD. Let me just get rid of it. And now let's add our RSI, right? So RSI stands for, in the meantime, I set it up here, relative strength, there we go, index, all right? So when I was young, just kidding, we have a recent update on this, which is the yellow or orange, depending on what colors you see, yellow or orange line. Sorry about that. Let me go here and double click on the settings, of course, and you'll see that, let me go to inputs, that is the 14 EMA or MA, sorry, SMA, simple moving average, 14 length, all right? That is this line here. This helps just to give you a threshold. Something important about your relative strength indicator is that measures strength. So remember that we added in here our ADX. It measures strength also, right? So which one is better? I would say that the ADX is a smoother version of the RSI, but in code it is not, all right? In the way I use it, it is, if that makes sense. And well, we do have a couple of metrics. Here you see a little channel, right? That channel, of course, will give you the center, the what we usually call the zero line, but in this case, this is not a zero. And that is because the way the RSI works, right? The RSI have, let's just for a second, turn off our, what is it? There we go, our EMA. Let's talk about just how it used to be, and then we just add the EMA, right? This calculates, it's based on the average gains and losses of the asset price. Basically, as the price action gains, it creates a percentage of that gains, or as the asset goes down, it calculates a percentage of that losses of the price action. Basically, waits for the price action to move and average a portion of that to give you a movement either to the upside or to the downside. Something interesting here is that your metric is not bi-directional. For example, in here in our oscillator, we have our zero, right? Which is usually our zero line. Perfect. Anything above, it's positive. Perfect. We understand that easily. And anything below, it's negative. But if we're talking about percentages, well, then in actual real life, you don't really have negative percentages, right? You cannot earn, well, technically you could if you pay out of your pocket, but you cannot earn negative $1, right? Unless you break something out of the store, maybe you need to pay for it. But technically, if you have none, nothing can be taken out of you, if that makes sense, right? O to the C, dude from Kidijiti, what's up, my friend? Love it, love it. Let me read that in a second. But I love it, my friend. Thank you for stopping by. By the way, cheers. Let me just take that coffee in. All right, talking practically. If you have not earned anything, nothing can be taken out of you. All right, so far so good, right? Also remember that your lifespan, it is based on a time frame. So as you change the time frame, this also going to change. There's one caveat here, and I need to talk about that because when I got started with RSI, this got me good, all right? And I didn't understand what I was looking at the moment. Let me see if that plays out on the replay mode. Not sure if that is actually going to play out, but let me describe what we're looking for in here. In this new version might be already fixed, and that is because as we get above a certain price action that I'm going to explain in a second, we get also a color. Look at that, it's greening here, right? And as we get below that threshold, we have another color, which is red. It's kind of like a confirmation there. Nonetheless, oh, come on, you might have times where you see your RSI going here, right? And then the price keeps going up. And as the price keeps going up, you'll see that we have a new candle and this thing shrinks and shrinks and shrinks, right? And shrinks again. And then the price kind of like make one big candle. This thing goes up and then the price goes down and then the other side goes down, right? So, and I was like, what the heck is happening, man? Like, I couldn't believe my eyes. Like, dude, I made sure to close my trade or to open that short as the damn thing was pretty much on the overbought zone, right? My mistake was not waiting for the flip, right? Usually that flip indicates that we're not peaking, or we already have peaked and we need that lesser calculation to understand that that previous peak was the peak, right? So because there's no fuel measurement per se in here. So the other side will stretch up and down depending on the percentage, because if you have 1 plus 1 plus 1, or the average, right, plus 3, right, and then this thing, because it's plus plus plus, those are gains, right? Remember, this is an average of gains, measure in percentage, all right? So you might be going up, 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 and then you have a negative 10. So what's going to happen here? 1 plus 1, 2, plus 1, 3, plus 3, 6, minus 10, I got you, negative 4, right? Or 4, just 4, right? So having that push here will make us that big movement. Therefore, the actual average, because this one is affecting the overall product, which is your peak scenario, this new information is part of the whole system, if that makes sense. Math nerd, you got me. Maybe I should start skipping those parts. But yeah, I got driven by the math thing. Yeah, thank you for that trade intuition. Really love it. But yeah, just explaining why you might be seeing that thing kind of like a shrink down. Just don't let it catch you off guard, right? Because it's gonna get you. It's gonna get you good, and you're not gonna be understanding what's going on. All right. Let's move in here. Remember that we talked about this is a measurement of strength, right? And it measures the gains and loss of an asset price over time, right, in percentage. So since you cannot lose anything that you have not gained, your lowest point, and yes, I know we have negative zones in here, but your lowest point is 0. It goes from 0 to 100, because here's where we get back in math, man. I don't know. You cannot earn more than 100, if that makes sense. Like, I don't know. If I earn today $100 and tomorrow another $100, what is the 100% of my gains? $200, right? What was the 100% per day? 100. But the 100%, that was 200. That makes sense. So you can never earn more than that 100, right? So having said that, it goes from 0 to 100. That's it, right? There's no zero line in here. So now, if we don't have negatives, if we don't have a threshold clear and clean, that's why usually when we have this oscillators, right, we give you a zero line and a very dramatic change of, hey, this is lost, this is gain, this is negative, and this is positive. All right, you see that? All right, so having said that, this is not realistic, but it is understandable. It's more easily digestible, right? Because we have that negative point. Nonetheless, when we're talking math, you don't usually understand it the way that it happens, but we go from 0 to 100. So in this point, what is a negative value? Well, everything that goes below 50, right? And what is a positive value? Everything that goes above 50. Why? Because 50 is just the center, right? If you go 50%, that is 50% down or 50% up. It doesn't matter. It's just 50%. So you'll see that our center point, it is at the 50% point. All right. So just by default, everything above 70%, it is mostly either bullish or bearish, right? Depending however you want to look at it, right? And anything below 30, that's your threshold, right? So when you get to 70% gains, well, yeah, gains, this is an imbalance. This means that whoever is making that move, right, or whatever is making that 70% gains, it is sustained by the rest, which is the 30%. You see that? So 30% cannot, absolutely not sustain the 70. So we try to measure that imbalance in the market. And when we have that imbalance, we should look for that peak performance and going back down. What happens in there on that peak performance? Right here, we have a rejection. You see that? Great. And what happens, usually what happens when we are below here? Perfect, we have a peak. This is important. In this case, we have a double bottom and a higher low. This is a divergence. RSI divergences, guys, are one of the most powerful out there along with your money flow divergences, all right? Because both ways we are measuring a percentage of gain, but in your money flow, we're measuring the speed of the asset influx, right? Or the value influx on the asset. So let's not get that nerdy. Nonetheless, those are the areas. So let's just wrap this up. Your RSI, it is basically giving you your zero line. It's going to be at the 50% point. Anything above 80, it's going to be overbought. So people have bought it too much. So we need to rebalance, right? And how do we rebalance? We retrace in price, right? And everything below 30, it is, again, an imbalance. People have sold too much and there's an imbalance in there. So markets always want to balance themselves in these measures that market balance. Usually when we have that market manipulation is when we start having divergences, right? So just so you are aware of that. Tomorrow we're gonna be looking at divergences, but let's just wrap it up with our RSI base MA, right? Which is the 14 MA. This is just a threshold, right? Let me tell you the same thing that I told you about the Fibonacci, right? Fibonacci, there is a right way to use it. There's not a right way to use it. Let me rephrase that. There's not a right way to use it. There is an intended way to use it, right? And somebody in the chat mentioned, I've seen a guy that draws it the other way around and makes banger trades. Perfect. Great, right? It doesn't matter as long as you find a correlation between what you're drawing and the result of the price, right? Everything else, who cares? You're making money, all right? So, I mean, the intended way to use this is just overbought, oversold, and then also have our center line, which is the balance. Usually when we are on balance, we range, right? And when we are on imbalance, we look for that balance back. All right, so easy peasy, lemon squeezy. Then the 14 EMA give you steady, less choppy indication of the trend, inner trend. So when we're trending down, we should be looking for a trend down. And then when we're having that unbalance, look at that ranging bottom, ranging tops, right? You looked at this like the EMAs of the MACD, right? Something like that. I don't do crossovers, but if someone else teaches you about crossover and it makes sense, go for it. I don't. For me, it doesn't have relationships. But again, once again, I'm not here to cap your interest the other way around. I'm here to tell you if that works, go for it. All right. So guys, this is it for today's class. Hopefully it hasn't been too much math for you. But other than that, guys, thank you so much for joining. And as always, see you guys tomorrow for divergences, one of my favorite topics. So we're going to be full nerding into divergences. Don't worry, it's going to be fun. I promise. So everything out, guys, thank you so much and see you guys tomorrow.